Hello and welcome to this presentation of the SAP FI New GL. This is the first in a series of training. We will focus on one feature, document splitting, in SAP New GL. A few years ago, SAP replaced classic general ledger function with SAP New GL. In this session, we will look at the differences and advantages of SAP New GL and take a deeper dive into document splitting. SAP has repackaged the general ledger functionality by making things easier for the accounting department and called it SAP New GL. With the functionalities offered by New GL, you can understand why Arcelor Mittal has migrated to the new general ledger. Those who are still using classic FIGL have to implement multiple components in order to fulfill international and industry-specific accounting requirements. To ease this problem, New GL merges the classic general ledger with profit center accounting, special ledgers, and consolidation ledger. Let's take a quick look at the advantages of New GL. One primary advantage of the New GL is the ease of implementing parallel accounting. This enables financial statements to be created in accordance with a diverse set of accounting rules. In New GL, you can easily create parallel ledgers. Let's take a quick overview. Arcelor Mittal is a multinational conglomerate with presence in Europe, USA, Mexico, and other countries. When it comes to reporting, each company has to follow the laws of the operating country. In Europe, reports have to comply with international accounting standards. The U.S. organizations have to report their financials in U.S. GAAP reporting standards. The company in Mexico has to file its returns in accordance with Mexican statutory accounting requirements. Arcelor Mittal Corporate must maintain its general ledger in accordance with international accounting standards. This will be the leading ledger of the company and must be in compliance with consolidated reporting standards in vogue at corporate. In order to address the United States and Mexican accounting standards, Arcelor Mittal has the flexibility of creating parallel ledgers, also called non-leading ledgers. But do you have to maintain all these non-leading ledgers separately? No, posting the transaction in any ledger automatically updates the required parallel ledger and keeps the ledgers in sync. Since you can now maintain different parallel ledgers, New GL provides you the flexibility of defining the fiscal year variant based on countries reporting fiscal year. For example, in the United States, the fiscal year is defined from January to December, while another country such as India defines the fiscal year as April to March. In a similar vein, just as you define fiscal year variants for the parallel ledger, so you can define additional currencies for the parallel ledger. Now you can do balance sheet evaluations based on the country's local currency. Like most other commercial applications, SAP also offers user-defined fields. And SAP even allows data from the user-defined fields to appear on reports. Classic GL had a fixed number of fields. New GL provides a standard extension of the data structure. Comparing Classic and New GL, the table on the right contains new fields including profit center, segment, and functional area. This is an example of how you can now define your own fields to save relevant information. Most of the classic CO functionality is now included in New GL. Much of the earlier chore of reconciling FI and CO has now been eliminated. One good thing is that New GL continues to use all the standard interfaces of R3. Thus, there is very little learning curve for all the new integration and conveniences included in new GL. New GL does not impact all ERP modules. Major impact is limited only to finance and accounts. Areas like profit center accounting and staging ledgers are highly impacted. The need for special ledgers may be completely eliminated. Now we are going to learn about document splitting, one of the key features of the new GL. This will be of particular interest to the Accounts Payable Department. Let's consider this business scenario. Arcelor Mittal just procured scrap iron worth $10 million from Eastern Metals in the United States. This transaction, for the sake of argument, had tax assessed at $1 million. And let's say the raw material is going to 2 production plants in 2 different locations. One plant in Ghent is going to use scrap worth $6 million. And another in Luxembourg is going to use the remaining $4 million scrap. How would you go about posting this transaction? The vendor account of Eastern Metals should be credited $11 million. The account of the Ghent plant will be debited $6 million, while the account of the Luxembourg plant will be debited $4 million, while the tax account will be debited $1 million. Since both Ghent and Luxembourg plants are manufacturing units, they both have their own profit and loss and balance sheet. Unless we also distribute the tax proportionately between Ghent and Luxembourg, the reporting would look skewed. For instance, Ghent would see a charge of $6 million but no mention of tax, and a vendor expense of $11 million. So how can we go about fixing this? Yes, in the old SAP system, it would indeed take multiple account transactions. You would have to go about posting this in the cost of goods sold ledger, in the special ledger, in the profit center accounts, and the reconciliation ledger. With custom programming, all the above could be automated. The new GL replaced all these transactions with one simple process. Document splitting makes life so much simpler for the Accounts Payable Department. What is document splitting? It is the new functionality that relates to cross-company or inter-business unit postings. Automatically splits the line items on a financial statement in real time for user-selected scenarios like profit center, segments, etc. SAP delivered pre-configured splitting rules that can be used to perform the online document split. You can also configure the rules to suit your own business processes. This feature is activated at company code level. Once you set up the company code for document splitting, the whole process of balancing the accounts for that company code is automatic. Let's look at an example. On the left-hand side of the screen, you have a vendor account, which was credited for $11,000. $8,000 worth of purchases was posted to Profit Center 1, and $2,000 of purchases was posted to Profit Center 2. The tax portion is $1,000. Very similar to the scenario which I spoke about earlier. Notice that this vendor entry on the left-hand side is not balanced for Profit Center expense reporting. Once document splitting has been activated, then the situation changes dramatically. As soon as you enter a vendor invoice, the line items are split automatically, as you can see on the right-hand side of the screen. Notice the profit centers. The vendor account has been created for each profit center, and the tax has also been split based on the percentage of purchase allocated to each profit center, which, in this instance, is 80-20. Who can define document splitting for me? Here's how SAP defines it. Document splitting is SAP functionality to achieve balanced segment reporting display of a balance sheet according to a set of legal requirements, or according to areas of responsibility or business units. In the above scenario, we saw document splitting reporting per the profit center. Now let's take a look at some SAP screenshots. If you look at the vendor invoice FB60 for company code 1000, the accounts payable person will enter the invoice for KR vendor. The amount is $11,000. The tax is $1,000. The two line items are purchase services of $8,000 assigned to cost center 9990, postage $2,000 for profit center 1402. If you look at the document overview of the entry screen, nothing has changed for the user. But now if you look at the GL view, you will see the additional lines that were created by the system automatically for each profit center without you doing any postings. So you can see how SAP has now saved time and effort with this new feature. This type of document splitting is called active splitting and is most commonly used. Does document splitting impact document posting? No, document posting remains the same from the end user's perspective. The new configuration settings automatically activate additional postings in the background. Do we need to enter segment value for document posting? Not anymore. The segment is automatically derived from the Profit Center master data when transactions are posted. What is entry view? General ledger view? One refers to the way documents are posted into the system. It does not have split items resulting from document splitting. The other refers to the general ledger's perspective that includes split documents. Let's look at the two SAP screenshots of entry view and general ledger view again as a quick recap. Do we need two separate FI documents for one FI transaction? Not anymore. The document is one, but the system now splits the information into multiple tables. Do we need changes to customer or vendor documents? Not at all. The original documents remain unchanged and are stored as before. Consequently, our customers and vendors are not impacted at all. The document splitting results in split documents that are arranged in the background by the system, hidden away from the user. When should we implement this functionality? At the beginning of a fiscal year is best practices. However, it may be possible to do it even during the fiscal year, but with the additional overhead of data migration into the new GL. Regardless of when it's implemented, document splitting becomes effective for the entire fiscal year. You can activate document splitting for a client or vendor, provided the document splitting functionality is switched on for the company code to which the client or vendor belongs. Document splitting's main functionality is to achieve balanced financials. This slide shows you the impact of document splitting on the balance sheet. The left shows the scenario without activating splitting. The right side shows how split documents balance out profit centers 1 and 2. Here's a quick recap of the advantages of document splitting. Our team would like to thank each one of you for attending. We now look forward to your questions.